All right, you guys, let's start Technical Tuesday. Today's Tuesday, March 31st, 2020. Let's get you guys seeing exactly what I'm seeing in the charts, and also included inside of this live analysis, I'm going to include some training. Going to try sticking real strict with the time. We're going to be finishing at 11:30 Pacific Standard, so about 30 minutes with you guys. So partially like 15 minutes going through some analysis, and then the rest going through some strategies to help you guys out with your Forex. Some of you guys might know the strategy, some of you guys might not. This strategy we're going to be talking about today is going to be Fibonacci. And by the way, if for some reason you guys have to leave early because things happen or whatever, you guys can watch the recording. If you go to YouTube, youtube.com, I'll actually pull it up right now. YouTube.com. And if you look up Market Masters Academy, there's going to be some videos that are posted under the MMA Technical Tuesdays. You can also see all the videos under the video tab and be able to see the recordings there. So also make sure to subscribe if you're not. All right, you guys. So let's first start off, see what we see with news for today. Okay, so today during the London session, we don't really see anything. We kind of see some light impact on Euro, GBP. We do see some high impact during the New York session for USD, also some at 7 a.m. Pacific Standard for USD, mainly the USD pair. So we're going to be looking at mainly all the majors that include the USDs. Those that saw the last webinar when I talked about the correlation pairs, I don't know if I've seen a lot of people post about the actual correlation chart. So you guys, that one is definitely a very important skill to have, the correlations, understanding what's going on. Now I did post this inside of the Golden Circle chat room where I can see a sell expected to happen with Euro USD. Now let me remove this. This was actually for an example. So there we go. So what I did notice with Euro USD, if I go out into the bigger time frame, so those that have taken the training know that there's this 200 moving average indicator that I use where you'll normally see the price hitting this area and then rejecting off of it. Now, being that it's an indicator, it's not a primary focus, but I did notice that price was hitting in this area here, and this is a daily time frame. So it hit in this area and then it's coming down. Now, getting into the Fibonacci strategy later on, you guys remember this portion where you would get the high and then you get the low right here. If you notice, and I'm going to be talking about this later on exactly how I'm able to see this, but between 61 and 50%, this is where price came up, hit this area, and then came down. Now, I did have this markup on my phone. So this is exactly how it would look here. But for now, I'm going to delete it just to not confuse you guys. Later on, I'll get into the Fibonacci stuff. Now, on the 4-hour time frame, oops. So overall, it was doing its pullback. We did notice like a double bottom down here, went into the uptrend, and then now having this support line here, it broke through, kind of created like a head and shoulder pattern right here. In this area, we can see the left shoulder, head, right shoulder. Price broke through the neckline. Now this line right here is a distance from this high to this neckline, is about the distance that it's expected to drop. So what happened was price broke out, came back, what's called a retest, coming back, hitting that resistance area, and then expected to drop down. So what's happening now, it's in that retest, and then it should be dropping. Overall, the entry should be, so what I did was I chopped the price even tighter going on to the 15-minute time frame. Now, if you see this support line here, so price was broken. So right here is basically the entry. Right now I'm in for a sell. I have a good risk to reward right now. Now, the stop loss, I know it's somewhere right above this area right here. So let me adjust this. This is my entry, stop loss somewhere up here, take profit all the way down there. So the risk to reward is definitely good on this one. Just holding out the trade. So this one's definitely one to look out. Now, on the indicators on MT4, we have like the threes where it's able to show right here where like right in this area is when it gave the threes. Again, those that have taken the training know that when you see these like areas here, you might spot the three happening on this left shoulder, and then as the trend goes higher, you would spot the three going up here, but you want to wait for some kind of reversal pattern to then be able to get in for the sell. So right now is definitely that perfect time. One of the entries could have been at the break of neckline, and then now the entry can be at the retest happening there. Now let's check out GBP USD. Now again, I'm going to bring up the correlation pairs just to show you guys. The Euro USD and GBP USD are ones that kind of move together. So we're going to bring that up. Now on Euro USD, we did notice it was that double bottom happening down here, kind of the same thing with GBP USD, creating a double bottom. Let me go out to the bigger time frame. Now, later on, once I get into the strategy about the Fibonacci, it's between the 61.8 and this 50% level that I already drew out. So I already marked off this Fibonacci knowing that price was going to go up, which there is a way with the Fibonacci strategy to be able to profit on its way going up. We'll talk about that later on. So right now, price is currently at this zone area, creating like that double top pattern. You see on the RSI, we talked a bit on the RSI last week. So if I mark out the exact points right above, it's like this area here, up like that, and then like that. So while up here is showing that it's going up, down here is showing that price is getting weaker, which means price is expected to get to reverse. Now neckline for this, mark it off like this. And I would say a good entry for this one would be, so we see that double top happening. It would have to break through this 50% level. I would say somewhere down here for entry. Now for this, most likely I'm going to have that pending sell order. Now I like keeping my stop losses above 61.8. I'll talk about that later on. And then take profit for this. Distance from this high to this neckline there is about the distance that it's expected to go once it breaks through. So in this area here. Now I do have a line marked off right here. So let me just remind myself why I have that line. Go on to the bigger time frame. Okay, so this is a major support area right there. So there's a chance price can come, hit the support, and then continue going up. Yeah, so major support area right there to expect. By the way, I'm going to be reading you guys' questions throughout this. So explain what you mean by RR. Someone said A. Oh yeah, so this one is a negative risk to reward. But here's the thing. So with this one, so this would be take profit 1. So this area right here would be like that TP1. Then I would say that take profit 2 area would be at this 23.6 right in this area here. So once I get into the Fibonacci stuff, you're gonna be able to see where you can have take profit ones, take profit twos. But if you can see right here, this 23.6 would be that next target. So take profit one is around that 38.2. Take profit two is that 23.6. It's also around that S5 on the pivot point. So about the fibs, I'll be covering that later on. Right now, don't want to train too much on that. Mainly focus on the different analysis. So DU's expected a drop. Now, let's look at USD JPY. So I had those that are inside of the signals group know that I had called the sell right when it was up here. I did catch it all the way to, it was somewhere around 109, and then it just continued dropping down. So as of now, this is kind of doing the exact opposite. So again, bringing up the correlation pairs, if I bring this up, so if you see GBP USD and USD JPY are expected to be the exact opposite. So on GBP USD, we see like a double top pattern happening. On USD JPY, we see like a double bottom happening. So we can see it's 1, 2. This is that support area. Now, if I was to do the fibs just like how I did it over there, it's around that 38.2. Usually, if it hits here and then reverses going up, breaking through this high, it's an aggressive reversal going all the way and continuing to shoot up. Move that now just so people aren't confused. Now, if you see what's happening on the 4-hour, there is some divergence happening. Kind of the same thing where this is showing it's going like this and like that on those lows. On the RSI showing price is expected to get stronger. So from here, I'm going to be seeing or expecting for this to go up. Now, this is that resistance area breakout somewhere above here. And distance for take profit about there for at least take profit one. Now, depending on what price does, there might be a chance price is going to come up, hit like this, and then come back down, creating like a triple bottom, or just consolidation, and then just waiting for an area for a breakout. So if it was to consolidate like this, then it might end up just breaking through. And then normally the distance on this side would also be like the distance once it breaks on the bottom side. So then it would be like a reverse target as well for a sell. And then just having two pending orders, one on the buy and one on the sell. Now let's bring up USD CHF. Now again, with looking at the news, we might be noticing most of these high impact happening at the New York session. So during the London, there might be some pairs that we might see. For now, we're just gonna see which ones we can get in on. So for sure, Euro USD. I know I'm in that one right now, so this one should be dropping. And by the way, just as like a reference, I'll just go ahead and post this. If you guys aren't following me on TradingView, go ahead and follow me. I'll post sometimes some of my analysis and when price is expected to go a certain way. Retest. Okay, and by the way, to follow me on TradingView, what you do is you go to tradingview.com. On this search bar right here, you're gonna wanna click on where it says ticker, you click on this, go to people, and then look up Risky Ricky. You'll see the one with the lion. Now, I think someone created like a fake account of me. There's a bunch of people doing that. Once you click on that, there should be like a follow button somewhere around here where you can follow and then kind of see the different analysis that I post. Someone asked if I believe in trail stops. So, I mean, I know it's a real thing. I know trail stops is real, so I do believe in it, but I don't use it myself. I tried using it at one time, but it wasn't something that I can see myself using all the time. That's something that you have to be like actively on the chart doing. What I've been doing with my trading style is more pending orders, or I'll get in right away for like instant execution. So I don't like, constantly looking at the charts, and for trail stops, you kind of have to be on there. Unless some of the orders you can actually place it with the trail stop, which is actually a strategy to be able to catch it from take profit 1 to take profit 2. You can put a trail stop, so it just keeps riding and going up once it breaks through the take profit 1. But trail stop it's a strategy on MT4. That one I don't really cover in any of my training because I don't use it. I mainly talk about things that I use. So anyways, looking at USD CHF, let's look at the bigger time frame, see what we notice. Let me actually erase everything just so you guys can see the whole breakdown on here. So let me mark off zone areas. All right, so strong resistance, it reacted off of it up here. Price came down. Overall, it's going into the downtrend. We can see creating lower lows. So I would say in this area right here, it can possibly be like an inverted head and shoulder on the daily, being that this is like left head and right shoulder. A little not so clear, but now getting with the fibs, low to high, did hit around this area. I can see USD CHF continuing to go up. Just based off of what I see, but I would definitely want to wait for price to be somewhere above here. This area, to then see this just continue going up. So at least from this 23.6 all the way to the 0.0, and then from there moving forward. Now let me know if you guys have any questions. I'm going to be looking at the chat area. Someone asked, what's the difference between buy and a buy limit order? So there's buy stops, and then there's buy stops, sell stops, buy limit, sell limit. So for those, you can actually, if you go onto the Market Masters Academy website, inside of the blog area, there's a section that says instant orders versus pending orders. So I would definitely suggest going through that. I'll send you the link right now in the chat, just so you can have that. But yeah, go through it, and it has like a simple explanation on what's the difference and all that. The main ones that I do use are buy stops and sell stops for pending orders. So for something like this, I would place like a buy stop up here or a sell stop coming down, being that as price comes down, it would activate the trade and then continue to drop. Sell limits, those are usually when it's hitting like a resistance and you think price is going to come up, hit, and then reject coming down. All right, so let's check out, someone had brought up EuroCAD. Let's see that here. Let me keep track of time. We're about to start doing the training portion, you guys, so be ready for that. Okay, so EuroCAD, erase everything. I would stay away from this, being that it looks very, very choppy. You see all these wicks happening. It's definitely very choppy. I guess on the 4 hour, it doesn't look as choppy. A lot of price movement happening here. Does look like that head and shoulder pattern, so that's definitely something to keep an eye out on. I love these patterns, being that almost every single time that I see it, your chances of winning each of these trades are much higher. So target all the way down here. Just off of this one strategy right here, like, you can win most of your trades. Especially being that it's a Tuesday, Wednesday, Thursday. So something to keep in mind is weekdays during the middle of the week, those are usually reversal days. So like, especially on Wednesdays, that's when you notice the market has reversal days. Yeah, when it comes to like seeing any of these patterns, you'll normally notice them on like Tuesdays, Wednesdays. Like normally Tuesdays would start forming the patterns, and then going on to Wednesday would execute the pattern, and it would break the neckline and then start the actual reversal. And then Thursday is kind of like the pullback, and then Friday would just continue the trend. And then yeah, it's just a whole flow of the way the market goes. I've noticed this almost every single time. Okay, so good question right here. Someone had asked, you keep closing trades early, if I have any tips. So the reason you're closing the trades early might be the fact that you're scared of the market. And that's where most people fail when they get into trading, is they'll exit their trades quick, make small profit, and then they'll hold their losses longer and lose a lot of their money. So make sure to pay attention to what I just said right there, because that's a really key thing. And one of the strategies that I use when it comes to, like, if you're closing your trades early, what I would suggest is first place your trade, place your stop loss, take profit, keep it there. Don't exit the trade until the trade is executed, until there's a stop loss hit or a take profit hit. The only time I would suggest closing early is if it's going on to Friday. And because the markets close on Fridays, you don't know exactly what's going to happen during the weekend, like on Euro CAD. Like this market gap isn't like too much, but it was a pretty big gap that happened there. Actually, yeah, that was a pretty big gap from this low all the way up here. So sometimes for something like that, it would pass your stop loss. If you had a stop loss, let's say right here, and you had a sell entry. So let me put it with this. Let's say you had a sell entry, your stop loss was there, take profit somewhere down here. It would jump above your stop loss. It won't even respect your stop loss, and it will go up here. Sometimes your account goes like really negative depending on what kind of risk you did on that trade, and it would mess you up. So definitely I wouldn't suggest holding it over the weekend unless you're doing more of smaller lots. Even if it did a big gap like that, it wouldn't be that big of a loss. Okay, so everyone keeps saying if I believe and stuff. Do you close trades before 2 p.m. Pacific Standard? Yeah, so good point right there. So 2 p.m., that's usually when that spread does open up. That's the new market calendar day. Being that the market's open 24 hours at 2 p.m. Pacific Standard, it goes on to the next day, new spreads, new everything. Yeah, usually I do close out before then. But I'm not, here's the thing is I'm not really trading during 2 p.m. So I mainly trade during the London and the New York, being that the New York is around like, for me it's around 5 a.m., 6 a.m. It'll last a couple hours and then that's it. Then going on to the Asian session and whatnot, like I'm not trading those sessions. Yeah, so anyways, you guys, going to go on to the training portion. It is 11:30 now, Pacific Standard. And you guys be ready for this part. And then part of doing this, I'll do kind of the analysis. So it's kind of mixing it together. So let me start with erasing everything and going on to here. So Fibonacci, if you look up the Fibonacci code and stuff, basically, I think the person was like Leonardo Fibonacci or whatever, where it did this pattern. It's like, let's see, Fibonacci sequence. It goes like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, and just keeps going on and on and on. If you watch videos on YouTube about Fibonacci, it's the way the world moves. It's a really crazy thing to wrap your head around. But the way that this sequence works is from 0 to 1. If you add 0 to 1, it's 1. If you add 1 plus 1, it's 2. If you add 2 plus the previous number, it's 3. 3 plus 2 is 5. 5 plus 3 is 8. 8 plus 13 is 21. 21 plus 13 is 34. And it just keeps going on and on and on. And this is kind of the way the sequence works. But overall, with the sequence, so there's certain numbers inside of the sequence. One of them being the golden ratio, which is what is it, 61? No, is it 61.8? The golden ratio, 61.8, 38.2. Golden ratio, yeah. So 1.618, 0339. Those don't matter. Overall, the 618 is the portion that matters. Now, when it comes to trading Forex and using the Fibonacci, it's not an indicator, by the way. This is an actual tool. So part of my main strategy is I mainly trade off of technicals, and then indicators are that secondary focus, something that is not really the primary thing that I focus on. So this is one of the tools that I mainly use. Now, I do have it onto my charts. Now, to add it onto your charts, on the left-hand side of TradingView, this third one down, if you click on this arrow, you want to go all the way down, and it says Fib retracement. So Fibonacci goes from 0 all the way to 100. So if you can see from this point that I clicked, I need to click 1 second time, and I'm able to drag this line over. The very bottom has 100%, this very top has 0%. And everything in between has these numbers, so 23.6, 38.2, 50%, 61.8, 78.6, 88.6, and then 100%. Past 100% is 110, 120, 127, 161.8. Past is 0% is negative 27%, 61.8. Anyways, to be able to use this strategy, the way that you use this is, let's say if market's going in an uptrend. So we have the low, we have the high, we have the higher low, we have the higher high. And then usually for an uptrend, you have higher lows. So what you do with Fibonacci is you grab the tool, you want to get the low to the high. And what this tool is going to help you out with is being able to see how far down the price is going to be expected to drop down, hitting some of these what's called retracement levels. What's called retracement levels, and then it would hit some of these areas and then bounce up going into the uptrend. So that's why you would want to get it from the low to the high, so then you see negative 23.6, 38.2, 50%, and so forth. Now, each of these lines play as like support and resistance. Now, this is why I mentioned if you're brand new to trading, you probably don't know what support and resistance is. So, you know, obviously you would want to get that training done. But the 23.6, so as you're seeing the price coming down, this is where I mentioned you could sell as the price is coming down and target these levels. So sell all the way down to 23.6, 38.2, 50%, any of these levels here. And then once you notice that reversal happening, that's when you can enter in for a buy. Now, overall, this Fibonacci is what I use for buy trades. So when it's going into an uptrend, what I like to say is buy low on an uptrend, sell high on a downtrend. So buying low on an uptrend is when I see it's going into an uptrend like this, marking off these points, this area right here where I'm expecting for price to hit and then shoot up is an area that I want to buy the market, being that already the trend is going into, I'll mark it off here, it's going into an uptrend. So being that I mark off the 100% down here, the 0% up here, the main areas that I focus on is going to be the 50 and 61.8. Always draw a box in there because every time the price comes down, it usually hits inside of this box, and then that's when price shoots up. Now, normally when price shoots up, hitting this box area, what I do is I'll place a buy above the 50%, stop loss below the 61.8, and then take profit. Usually it's going to hit at least this 0%. If not, it's going to hit negative 27% or even higher, all the way up to 61.8. So this is when you can start having like take profit 1, 2, and 3, doing it this way. Now, I'm about to show you on a chart right now for an uptrend. So now it has to be like a significant pullback happening. So let me find an area It's like a smooth uptrend happening. Let's say like this area here. So from this low right here all the way to this high up here, you can see price came up, came down, hit that 60% level, 61.8, hit it, and then it bounced up. It bounced up all the way up to about negative 61.8 on this fib area. Now, what you do when price bounces off and then it creates a new higher high up here, that's when you adjust the Fibonacci. So I'll show you on the stick figure that I drew over here. So when price breaks above and then comes all the way up, and then once you start noticing that price shoots back down like this, that's when you adjust your Fibonacci. So this previous 100% level right here is going to go at this low over here. So I'll mark off the area. So it's going to go to this low here. And then this 0% at this previous high is going to go to the next high all the way up there. So now we have new price reversal zone areas right here where when price is shooting down. Now I did mention to do the box between 50 and 61.8. So when price comes down and if it hits this area, you can then buy in this area here above the 50%, stop loss somewhere below 61.8, and then take profit either at 0.0, negative 27%, and 61.8. Now the 0.0 is going to be usually your best bet, being that it's going to be this is a resistance area. So when price shoots up there, it's most likely going to shoot and probably reject off of this area right here and then come down. So every time you notice that the price does create another high and then comes back down, that's when you can adjust your Fibonacci. This 100% or this 0% can go on this next high up here, and then this 100% of this fibs goes on this low area right here. And then again, you want to draw that box between 50, 61.8. And usually your price would go down to this area, hit, and then reject going up. Now, this 38.2 and this 23.6 are also levels where price can hit and then reject. I normally don't like looking at the rejection off of 23.6. There's a part to really pay attention on because you could probably get lost here. So at 23.6, if price hits off of that, and let's say it comes up here and then it shoots down. So I just adjust this 0% to this next high up here because I don't consider that as a significant retracement coming down and then shooting up. So I would wait for this to go even higher, and then once it passes this 23.6 and then going even lower, if it hits 38.2, then I would consider that as like a good level where it can hit. And then usually at 38.2, you will notice aggressive reversal. So when it hits, it usually would hit, reverse, and then spike up really high up. Okay. Now let me see some of you guys' questions. So would you buy it if it didn't go all the way down to the golden zone? So usually that zone that I mark off, that's the main area. But sometimes if it hits 38.2 and I notice like, Usually for the 38.2, so what I've noticed is when there's like high impact on news happening and the price is at 38.2, then there's a chance it's going to hit and then just skyrocket going up. So that's when I would get in at 38.2. But at 61.8 and the 50% level, that's like how the trend is like averagely going. There doesn't have to be any news happening, nothing to push the market up. It's just flowing into the uptrend as it's already doing. So now EuroCAD isn't really a pair that I trade off of. I'm gonna show you guys like Euro USD, how it would go about this. So let me delete this. Now the time frame that I do mainly do the Fibonacci on is going to be the 4-hour time frame. So this area right here. So I'm just going to mark it off. This low, this high, this low, this high, and this low, going up. So from marking off from this low to this high, let me zoom in. Okay, so you can see price pretty much hit around 38.2, 50%. Price just came down, hit this area, and then shot up to 27%. You can see it hit 27%, came back down to 0%, and then shot up. Now, when the price shoots up, so this is kind of that example that I was mentioning. Once price shoots up and then you see a reversal happening, that's when you would adjust your Fibonacci. You move this 100% to this low, and then the 0% at this high over here. Now you can see price hit that 23.6 area. You see right there, 23.6, it hit and then it shot up. So I don't consider that as like a significant reversal that happened and then going into the uptrend. So what I would do is I would move my 100%, I mean this 0% at this high up here. And then now we have an actual area from this low all the way to this high up here. Okay. Someone said Euro USD and profit. Anyways, I'll look at that later on, but I'm pretty sure it's profit for the sell. But anyway, so price high comes back down. You can see between 50, 61.8, price perfectly hit it, and then it shot up. You can see it shot up all the way past 0%, past negative 27%, and even to negative 61.8. So it definitely hit all the targets for this uptrend. Now, where I mix this strategy is when it's going into the uptrend like this, I get my support line like that. So I already have this low, have this high, and then price comes down, hitting like support right here. So there's double. This was one support, it broke through, hits this support here. So it hit double support, plus it hit the 50%. This is already 3 confirmations to be able to enter in for a buy right here. Now, if I extend this support line, my new Fibonacci is going to be the 0% all the way at this high up here, this 100% at this low right here. Now, if you see, if I draw between that 50 and 61.8, price came, it hit 50, 61.8, and then price shot up all the way up to 0%, right at this high right there. And that's why I mentioned this is an area to be careful for because it is a strong resistance area, being that if price doesn't break through that resistance, then there's a chance it's going to reverse. So for an example like this, so let's say price is coming up, okay, and then we start seeing the reversal. So then we would adjust the Fibonacci again, 0% down here, I mean 100% down here, 0% up here. because there is a chance it would come down, hit this area, and then continue shooting up. But what happens is, if I zoom in here, you can see these areas where they're red, this 110 and 120. That means the market is now reversed. It's now in an area where it's going to create a lower low, which when it starts creating a lower low, that's when we know it's starting to show us a confirmation that market's expected to reverse. So now I mentioned about how to be able to do the uptrend, but for the downtrend, what you would do is, let me mark it up here. So let's say we have the uptrend happening, and then once we notice it's going into the downtrend, so creating lower lows and then lower highs, once it creates a lower low, the Fibonacci is now flipped. So instead of getting the low to the high, we now flip it backwards. We now get the high to the lower low. And now the Fibonacci is switched backwards. So now we're looking for price to come up and hit around these areas. So either 23.6, 38.2, 50, 61.8, 78.6, and so forth. If it passes above here, it's no longer in the downtrend. But we would want to draw that box between 60, 50%. So it might hit it and then reject coming down. Target for 0, 0, negative 27%, 61.8. Put a 1 in the chat box area if this is making sense. Put a 2, and honestly, put a 2 if it's confusing. 1 times 1,000. There we go. Cool. So everyone's getting it down. Awesome. Awesome. Everyone's getting it down. Cool. So yeah, obviously, you guys will have to practice this, especially if you're hearing this for the first time. You're gonna have to practice this and just get used to seeing it on the charts, because it could look pretty easy when I mark it off like this, just lines. But when you go onto the charts and see candlesticks, it gets a little bit more confusing. But overall, it's not that hard once you get it down. So anyway, so for this example here, so price comes down, pulls back up, hits 61.8. And because we already know it's going into the downtrend, most likely it's going to go all the way down. Let's say it hits negative 61.8. And then we start seeing the pullback happening. So when it comes back up, what you're going to want to do is now you adjust your fib. So this 0% goes at the lower low, and then this 100% goes at the lower high, right there. And now you have a new area, so you wait for this to come up. Now, I normally draw the box between 61.8 and 50%. And price comes up, let's say it hits it, and then it shoots down. Now, these areas, when it's between 61.8 and 50%, and it's also at support, what was one support is now resistance on this horizontal line, plus it's resistance going down like this. This is like the perfect area to sell right there. This is a part where I would get into the market, I would place a bunch of lots, and I would know the market's expected to drop down. Especially, so I normally see this on the 4-hour, but let's say if I go on to like the 15, and on the 15-minute time frame, what I'm going to notice is it's going into an uptrend like this. And then what I would notice is there might be a reversal pattern. So let's say a head and shoulder and then neckline. This is when I would get in for a sell, right? When it breaks through, and then I would sell. Now, I wouldn't sell for the distance from the head to going down there. I would catch this entire thing. I know for a fact I would take the profit, being that it's that distance from head to neckline going down, but I would make a lot more to at least hitting this the 0% down here. because it's already on a downtrend. So being that I already know it's going on a downtrend, I already have the zone pointed out. This is where I would get in, catch it to at least 0%, and if not, negative 27%, negative 61.8. And then it's all just a repeating cycle. As it's going in the downtrend, you just adjust your Fibonacci, 0 to the low, 100 to the high. You draw your new zones. It's always going to look different depending on the strength of the price and how low it drops down. Sometimes these lines will be a little bit separate. By the way, if you guys are enjoying this, tag me on Instagram at RiskyRicky. You guys saw last week I posted everyone's tag, or almost everyone, at least the ones that I saw on my story. So let's see what time it is. Okay, so we got a couple minutes here. So let's cover over the downtrend areas. So okay, so I'm going to spot out this downtrend here. So we have this high, this low, this high here, this low, and it just keeps going into this downtrend here. So let's see how this would play out with Fibonacci, getting this high to this low here. Now what you can see is price hit exactly at that 61.50% level, and then price came down all the way down to negative 27%, right in this area. Then after negative 27%, that's when you see price shooting up. So when price shoots up, that's when you adjust your fibs, 100 to this previous high, or this next high, and then 0% at this lower low. Again, you can see price going up, hitting 50, 61.8 area perfectly, and then price coming down all the way down past, a little bit past 61.8. Now, once you see this reversal happening, you adjust your fibs again, 100% up here, 0% down here. And then again for the, what is it, third time, it hit 61.8, 50% level. And by the way, I didn't plan this, I just pointed out a downtrend. So now I'm pretty sure I did this in the past where I pointed this out. But yeah, so price came up, hitting the 61, 50%, came down all the way down past 61, negative 61.8. And then if I was to continue it, so the reversal happened right in this area, all the way down here, and then it reversed. So I would move this 0% all the way down here, and then this 100% all the way up here. Now, if you can see, price shoots up, continues to shoot up all the way past this red zone. Once it's in the red zone, that's an indicator to be able to flip your Fibonacci. Now, the 0% should be up, and then the 100% should be down. So let me adjust this, 100% at the bottom, 0% at the very top. So you can see price comes up, comes down, hits 23.6, and continues to go up. I mentioned if it hits 23.6, I don't consider that as a major area. I want to mark it off up here. Now, being that markets have been pretty crazy, you can see what's been happening. So now we can see it's at around 50, 61.8, price shot up to 38.2, and then it just continued dropping down. But if we marked off this entire area, so overall it dropped down and then it went to this red zone. So then I would have to flip it again, being that markets have been moving pretty crazy. So now that it's flipped where it should be, now this is the part where I was trying to explain in the first part of this, when I was doing the analysis, was if you can see here from this high to this low, price came up, hit this 61.8, and then it's now dropping down. So where do you guys think that the price is going to drop down to? All the way down to at least this 0% level. Now, being that I already see a head and shoulder pattern, price broke through, came up, retest, I already know that it's expected to drop. So I'm already in for a sell. I already called this out. Now, I am closing out a little early, but being that you guys already know, it's most likely going to hit that 0% level. So, and if not that 0%, all the way down to negative 27% and negative 61.8. Cool, you guys? So I hope you guys got some gold nuggets here, some stuff that can really help you guys out with your trading style. Just really focus on that 61.8, 50% level. I'm telling you, almost every single time the price would go up to that area, especially if you're already going with the trend, it would hit it and then it would reverse. So awesome, you guys. Someone asked, when do you think it's going to hit TP? That, I can't predict the the strength and how fast it would hit it, but I would say the way everything's going right now, probably maybe a couple hours. I want to say by New York session, especially with like strong USD impact happening, like it would most likely definitely push it even stronger. So yeah. Now let's see. So the fib, I'll mention this again. So I mainly use a fib on the 4-hour time frame. Use a fib on the 4-hour time frame. Now there is a scalping strategy that I did at one point, and I was pretty successful in, where I would just use Fibonacci on the very small time frame, and I did this mainly on my phone. So I actually did this one day, and I think this was like, I want to say like 2 years ago, where I flipped a $100 account to like 1,000 in one day, and I wish I can like pull up the exact stats or the exact day. I don't remember. I knew I took a screenshot of like the results. I would just need to find it, but that was way back when. But what I did was on the smaller time frame. So, and by the way, I'm gonna give you guys a really good tip with this Fibonacci real soon. So what I did with the Fibonacci on the smaller time frame was I just looked at areas that price was going into an uptrend. So, or let's say downtrend. So right here, so we have this low, this lower high, and then lower low, and then price shoots up to like a lower high. So from this area here, I would get like this low, this high to this low, and we can see price came up to 61, 50% level, and then shot down all the way down to negative 27%, came up to 0%, and then all the way down to negative 61.8. So I would have caught this for a sell, but what I did was I mainly targeted 0% because I already know everything's going into a downtrend. The trend's dropping, so then I'll just quickly catch some quick pips all the way down to the 0%. So that's the strategy that I used. I do sometimes still use it, but I mainly focus on the 4-hour and just try catching the overall trend and which way it's going. Now, here's a tip here as well is if you've studied the major market patterns, which I have some free training on, if you go onto the website, there's free training available. One of them is for a webinar that I have. It's like a 2-hour free webinar. And by the way, you guys, I don't know if you noticed, I enjoy doing this. I enjoy helping everyone out. So this is like, to me, this is fun. It's not even work for me. This is just fun. But anyways, let's say if you spot out a head and shoulder pattern. Now to spot a head and shoulder, obviously it would have to be a previous uptrend that was happening. So we have the left shoulder, we have the head. And if right here in this area where we're expecting for this right shoulder to happen, what I would do on this right shoulder is I would get this high and I would get this low, and then I would mark off this 61.50% level. And this is a way that I would get into a trade. Like for head and shoulders, I normally get in on the break of neckline. Like that's the strategy. You got to wait for the break of neckline. But there's a way where you can get in earlier, be able to predict that right shoulder earlier when it hits the 61.8, and then you place a sell below the 50%, stop loss above 61.8, take profit to at least the 0%. Now this could be like take profit 1, but overall we know with head and shoulders, the distance from the head to the neckline is what it's expected to drop. So the main target should be all the way down here, but at least you should be able to catch this coming down to the neckline and then just make some quick profit. So that's where I would catch it for like that head and shoulder pattern. Cool, you guys. So by the way, this webinar is going to be recorded. You can go back to it, rewatch it, study this. And if you haven't, take the training, actually invest into your education. With the training, I break it down like step by step. Right now, I'm just covering over like, little strategies here and there. Well, this one's actually a big strategy, being that it's very effective. The thing about this one is, it takes some time to really get it down. So when you're taking like the training step by step, it's kind of easier because we cover over like higher highs, higher lows, like kind of the basics, so then you can get that portion down at least, and then start taking some more advanced strategies once you get the basics down. So anyways, someone asked, where do you see the recorded version? You're going to be able to see it if you go to youtube.com, look up Market Masters Academy. Under Technical Tuesdays, it'll most likely be uploaded within the next hour or so. It'll be on there. There's not much editing that I do. I just literally I get the file, put it on YouTube, put a picture on it, and it will say Forex live analysis for 331. I'll show you. We actually have the last one posted on there for 324. So you'll be able to see it on the Market Masters. Make sure to subscribe, like the video, show some love on there. Yeah. So that's it, you guys. Don't want to extend this any longer. I actually extended it longer than usual. I told myself at 11:30, give you guys an extra 30. So hope you guys enjoyed it. Got some value off of this. I saw on Instagram some of you guys already tagged me, so appreciate you guys. I'll repost it all. And yeah, you guys have a good night. Let's catch some pips. Let's make some money. And we'll see you guys next week.